G'day all, Ben here, East West. It's time for our weekly look at uranium. A bit of a tough week for the space this week. Let's just jump in and have a look at what we can see. So just going to start here on URA. So a tough couple of weeks, I guess, for impatient. This is how I'd view the market. A tough couple of weeks for impatient investors. Just part of the course for long-term patient investors, and good trading opportunities for the bears, I would suggest. So where do we sit? So if I bring in the weekly Ichimoku cloud, we have just slipped, and this will probably be pretty prevalent through most of them. We have just slipped now below that Kaijensen and just closed below it. So we're out of balance a little bit here. It's still okay, but I think what is likely to start happening here is this. I mean, we're still a long way away from the cloud, and basically my view is, as long as we're above this cloud, we're okay. All right. So the breaking of the weekly cloud is the big signal. So we just stay above that, we're fine. And you can see this cloud's getting thicker and thicker, which is reflecting the strength of the trend that we had through 2023. So things I'll be watching for in the future would be the Kumo twist, the cloud twist, which we're nowhere near. So that that's something for way off in the future. I don't even have to worry about that at the moment. So this is a cloud twist, but this was a market that actually this cloud twist did warn that this trend was over. So we're a long way away from that. It's not something I think we've got to think about right now. All we've got to think about for right now in terms of the bigger picture is the main trend. Even though this trend is broken, we're now running. Let me just turn this cloud off here. We're now running at a trend of a different pace. So, pardon me, that's not the right one. You could probably kind of think of this now, and this, of course, is the main big trend line, which took us off the COVID low. So I think as we sit, this is okay, even though in the short term it looks a little bit dicey. It could possibly, bring back that idea that I was thinking about of the trading range, but that's yet to be seen. But this now does look like a pretty conclusive false break. So we're going to look at some Wyckoff implications, because I think there are some here. We'll probably go back and visit the sort of schematics and just think about how the market's structured up. But anyway, that's the weekly. Let's just jump in and have a look a little bit closer and see what we can see. So there's a few markers here that I think we're just going to be wary of. So this downswing through here, this went for 9 trading days, fell 11%. So this downswing now is overpowered it. It's been 15 trading days, and we're down nearly 14.5% at the low, if this proves to be the low. And I'm not convinced this is the low of this downswing. Okay, so we do have an overpowering downswing. I mean, this upswing was very good, and so far this downswing has less power than this upswing. But I certainly wouldn't want to see this downswing overpower this upswing. So this was 24 days and 20%. So what I'm saying is I wouldn't want this. So if this was 24 days and where's 20%, a little bit further down, you can see where that would. So that would couple up. If this was still doing this, and then we were pressurizing these lows, that would not be a good sign. I'd have to rethink what's going on. However, that's all just prediction work. We don't know what's going on. All I can see at this stage is that this swing has outpowered this downswing, so a bigger downswing. And like I said, I don't think this is over. And the reason I'm sort of looking at this now is because of the way it's behaved. It just makes me doff my Elliott cap. In so much as thinking about this move down as an impulsive move, because it does look kind of relatively clean. So let's just look at it in that perspective. So I'm just down here on a 4 hour. So when I grab the bottom of this low, the first thing I would have been looking for is for the market to hold the retracement area, which it did initially here, but it's failed through. Okay, so what we've now done is we've come down to test into this band. However, I'm not convinced that this is going to be the low of the move. I think we might have one more. The reason for that, I'm just looking here at the first movement. So when I'm looking at this move here, okay, so we had a move down, quite a sharp move down. We've had a 3-wave move back up, and then we've had this move down. Okay, so when we measure the move down here, the market came right into the high probability zone for a third wave. Okay, so when I see that, I'm thinking, oh, okay, look, what I've got here, it looks like to me 1, 2, 3. That's just what it looks like. Okay, a sell-off, a sharp bounce, an extended sell-off that's come down into a certain fib area that would make me think that, due to the nature of repeating patterns, that this is another pattern repeating. Now, I've just turned my indicator off because I just wanted this to be look a little bit cleaner. I don't know if it does. Hang on one sec. So one of the ways we measure out potential areas for wave 5 is a length of 1 projected off 4, and we don't know if this is the top yet. I mean, well, we don't even know if this is a full wave structure, but if this starts doing this and then starts to come down, then I think it looks pretty much like the textbook would explain it. So that would bring us down here to $27.86. Okay, you know, that's going to put us sort of in the range of this structure here. You know, this spiky low that we haven't really tested since back here in April. Well, we're only on a 4-hour here, remember, so that back in mid-April. And really, when you think about it, if this happened, it's not really a big deal. I mean, just look at it in the context of where we are. It would just sort of, to me, mean that, you know, we're just doing this sort of range play. So, you know, it's not a massive deal, but just in terms of short-term trading, that'd be what I'd be looking for, and then I'd be looking for signs of divergence in the RSI, which we don't have. So, you know, what you want to do is price to make this come down and make this low with the RSI sort of not breaking this bottom and then starting to push back up. And at that point, you go, okay, well, it looks like this little movement here is done. So that's just it's just a down leg, a downswing. We don't know if that's going to go on. But like I said, that's just what I'd be looking for. Okay, that's just how I'd be playing this as I sit here and watch this at the moment. That'd be the sort of area I'm looking at. So that's where we sort of sit with URA. Now I'm just going to move on to sort of the other ETFs. So it's just looking at URNM, and it's the same sort of deal, right? So, you know, this is the same formation, and it's come down to the same area. So it busted its main retracement zone, so that's sort of done. And then when we look at this first movement, it got right into between the 50 and the 61.8, and then down it came. Okay, so, and it's also reached right down into this area. So once again, that leads me to think that, you know, potentially we're looking at the 5-wave structure unfolding here, which would take us down, if it was going to play by the textbook, which it probably almost certainly won't, would take us down here to just above $47. So, you know, you're probably talking about all this, okay, all these sort of areas here, which haven't been tested once again since back in April. So, you know, the same sort of structure unfolding, but that's kind of where I'd be looking. I'd just be thinking, okay, well, that all culminates, and then we get that divergence in the RSI, meaning that the up bars are starting to overpower the down bars in the last 14 days. If you set it to 14, you know, that would be the sign that this movement is starting to bottom out. But I'm sort of in the opinion, just up here on the short term, that it's not found its bottom yet. It could be wrong, of course, but I think it might just have one more push. That's just how I'm looking at it. But once again, you know, what does that mean? It just sort of means that we're doing this, right? No big deal. It's just time. It's all about time. Okay, so I'm just going to jump across here to URNJ, because this, you can just see it's exactly the same thing, right? It's done the same thing. It's reacted quite nicely away from here. It's just sort of breached here, but it's only done it on a wick. But once again, I'm thinking, because it all looks the same way to me, 1, 2, 3, 4, that maybe this one will come down and test the bottom of the range, because you know, the juniors have been a little bit weaker at that. They don't really have the supporting power of CCJ in them in the ETF. Sorry, so, you know, yeah, this one's probably dangerous slipping a little bit below, and maybe we just get down there. But if we do get down there, that kind of a you know, and when you look at this line, like, nothing's, you don't have to be exact about it. I mean, things, sometimes you get exactness, but often you don't. So we could just get down here. It's just not a big deal. But if we take the length off 1 and think about it off 4, you know, it would be sort of down, pressing down here. But when I see that, I'm sort of looking at this and going, okay, well, I've looked at this in a Wyckoff sort of situation before. Is there a way that I can look at it again? Is there something re-emerging that makes me think, oh, okay, well, not so much. I'm definitely not. I'm not trying to. When I do all this, I'm not trying to predict the market. I'm just thinking, okay, well, if it gets down here, what does it look like? If it gets down here, what does it mean? So when I'm sort of seeing this going together, I'm thinking, okay, well, can this sort of conform to some sort of schematic? So, this is the distribution schematic, which I'm still not of the opinion that this is what's going on. But you can never rule out the downside, because there's always a chance that the RSN drops out of the market. It just can. Against the fundamentals, it just, no one can explain it. And certainly all the perma bulls that sort of thumb their nose at anyone who suggests it's not going up tomorrow, they won't be able to explain it. No one will. Sometimes the arse just falls out of the market. So always consider that. But, when I'm just sort of looking at this, I'm thinking, oh, okay, well, buying climax, automatic reaction, just in this part here, is this up thrust here, is this what this is, where we've just set like an upper boundary, meaning do we have now like another test down that we're getting now, that we get up here and start to struggle and we just then start to fail like that? You know what I mean? Like, I'm not trying to force that idea into what I'm seeing. I'm just looking at what I'm seeing and think, have I seen this before? Is there something here I can work with? Because this trend channel, we should get rid of that, because that's done. Is this what's going on? This would be the sign. I mean, if this played to this tune in some way, shape, or form, and you got up here and we started struggling again, that would be problematic, I would suggest, at that stage. That would start to look awfully like this. Okay, which isn't to say that just if it does, because look, just if it does this, it might do that, right? And then it might just do this. It's not impossible. It can happen. So you don't lean on anything 100%. But I'm just looking at this thinking, okay, well, maybe there's a chance that this is sort of starting to form up a little bit like this. So I'm just going to have to be aware. Like I said, I'll just see how this pans out at the bottom, because it's just the test down here that we're interested in at this stage. If we get one, look, maybe this isn't 5 ways. Maybe this just does this and then it just goes. Certainly it's possible. Okay, I don't know what's going to happen. I'm just looking at what I'm seeing. Like I said, have I seen it before? Can I make some sort of sense out of it to lay a plan? So that's the distribution case. And if it is going to be a distribution, I think you got a long time before that plays out. That's just how I would look at it. So the other way I'm kind of looking at this, which I think is more, I'll just move that over so you can see, is more my favourite option, I think, is that this is the accumulation that happens at the bottom of a run. But you can apply this the other way. You've got to sort of just sort of imagine it a little bit in your head. But this could be more like a reaccumulation. So the market rallies, runs out of puff, it starts to reaccumulate a position before it goes on again. So that's why I'm kind of looking at this, and that's why I'm saying, okay, well, if I think I've got 1, 2, 3, 4, and I might get a fifth wave down here, will that constitute a spring, a push below the levels? And remember, we're talking about probably all this, a move to trap breakout traders, people, or suck in people to bail on their positions. That's basically what a spring is, right? It's a test down here, and as the name suggests, it would spring out quickly because there's a lack of sellers down there. Okay, it's a failed attempt at a breakout, basically all that is. So it's trying to break out to the downside, it fails, and it springs back very quickly. So I'm just sort of thinking, okay, well, if we're going to have a spring, a test below the level, and a ricochet out 1, 2, 3, 4, 5, we let it go together. Then all of a sudden, I mean, this is quite stylized. I don't know how it's going to happen, but you would then expect, if we get some sort of trend, we start bogging down here, but then all of a sudden we break through with follow through. And if you remember that the breakout video that the Red Devil Chris and I did, you're talking about there's breakouts everywhere, but you want the breakout with the follow through. So you want this broken, tested, and then to go, the confirmation that it's going to hold, okay? Because otherwise you're just going to get another one of these. Right, so that's kind of where we sit this week. I don't think there's a lot more to say, other than that I'm just looking at these sort of 5-wave structures unfolding across the space. So that's where we sit. Just be on the lookout for a little bit more downside. But I think, like I said, into next week, if you get that little bit more downside, that's going to be your opportunity. So if you're going to take that opportunity, just think about the whole thing overall in terms of the big picture, because the big picture view with a solid risk management plan, maybe your risk management plan is, oh, well, if I can buy it in that zone, I don't want it below this zone. But, if I'm going to get that, I'm looking for this. So, just check your risk reward, what you're thinking. But what I'm saying is, just have your short-term plan with the long-term view. Okay, strong views, weakly held. All right, so that's where we sit. That's my opinion as we sit right here and now. Thanks for watching. Don't forget to hit like and subscribe. I'll see you in the next video. Bye for now.